Apologies for the scare this morning. I think the timing and the link got mixed up. So apologies to anyone that had an issue with that this morning. So
And this webinar is being recorded, so if you guys do have to leave for any reason, not to worry, we'll be sure to get that recording out to you guys shortly after. And just a reminder, please put any questions in that Q&A section, and we'll try and get to as many as we can. I know there was quite a bit that were emailed in as well, so Chef will try to get through as many as he can. And again, just put them in that Q&A section, please.
well, why don't we just kick it off? Thank you so much, Abby. Thank you everyone for jumping on. I'm going to start by I think there's some new investors that have obviously kind of come across Victory Square as a result of Hydreight. I'll start really quickly, just kind of going through just a quick update on the deck. Just some information that might be a refresher for some, but new for others. And then we'll get to the questions. So I had a bunch of questions coming in, and I want to make sure I get to all of them. I've kind of organized them. A lot of the questions were around Hydreight and Game On. So I've kind of grouped them together and prioritized them so I could get to as much as I could. But let me just get a deck set up here. Second here. Give me a second, everybody. I'm just going to. Perfect. So again, just quick refresher on Victory Square. Um, for those that are not familiar with us, we provide VC investment access to some of the world's most innovative early stage companies in a public stock that's audited, transparent, and liquid. So the majority of the companies that we look at are generally early stage tech opportunities for high growth. This is an asset class that a lot of investors don't normally have access to. Companies that are startups generally will stay private longer. And unless you know someone or you're part of an accredited, VC fund, these are an asset class that you're not normally getting access to. So for Victory Square, what our goal was to make these investments in a number of sectors and areas that we had expertise and access to, and companies we could vet and put them into a public company and allow investors all over the world to invest in them. Given that VST is audited and liquid, this would allow investors with as little as $50 or $500,000 be able to invest and trade the security as they saw fit. So there wasn't this requirement to know someone or have accredited investor status or long-term commitments, as most VC funds generally have a 10-year kind of time horizon. Currently, there's about 25 companies in the portfolio. We generally keep it 25 or under. We just given the ability and time and capacity and resources, we try not to go above that. And so currently there's about 25 companies in the portfolio. The sectors that we focus on are digital health, artificial intelligence and machine learning, blockchain, immersive tech, so virtual, augmented reality, mixed reality, gaming, and climate tech. Currently, our unaudited NAV is currently sitting at around 96 million Canadian dollars. Our market cap is around 15 million Canadian dollars. So there's about a 6x difference in unlocked value there between those two. Within the NAV, and I'll get to that as to like how it's broken down and how it's grown over the years. It's kind of broken into private, public, and kind of incubating. A big jump. So anyone that looked at our last webinar, that number was, I think, in the mid 70s to high 70s. And a big jump on that has been the growth of Hydreight in the most recently. From a financial perspective, we've got cash and liquid securities, just over 5 million Canadian. So we've got a very lean burn. So, access to runway, no kind of concerns about dilution at these price levels. And there's an alignment with ownership. So there's, about a 15% ownership. I'm the largest shareholder in VST. So there's an alignment with investors there that there's skin in the game. I wanted to kind of refresh this slide. Someone had sent me a note. I don't know if it was a sarcastic comment about a three-man operation at Victory Square. But for anyone that's known our story or followed our story, one of the strengths is the strength of our team. A lot of our portfolio companies and talent, came from an incubator that we had been collaborating here with in Vancouver called Launch Academy. We are able to access advisors through that and through an annual conference that we used to host called Traction, and just relationships in different industries. So the strength of our team is wide. This is one of the big value adds for our portfolio companies, is that when they become part of the ecosystem, they're able to get access to advisors that are not paid, that have specialized, that are relationships with Victory Square, that specialize in different areas, whether it be sales, development, cybersecurity, blockchain. We've got a really, really wide network of advisors and relationships uh, that give us a competitive advantage when we're looking at companies because they're getting more than just, let's say, a check in money. But also within the ecosystem, there's a lot of collaboration amongst the portfolio companies where they're able to share talent, tech, best practices. And then there's relationships that we have with companies like Amazon Web Services, Microsoft Azure, Google Cloud, GitHub, and more, where we're able to access and get credits for companies to be able to use different types of software. So there is a very, very strong team aspect here, which is why a lot of companies end up collaborating and working with Victory Square. So this is a slide I just wanted to share again. I think as more and more people have been kind of looking at Victory Square, there's been a lot of comments, I think, negative comments about I think someone refers to, and a lot of investors don't know this. I've heard the term speed bagged. VST is getting speed bagged. Um, just as a refresher, I've been in the technology space for over 20 years and have rode through multiple cycles, whether it was the first dot-com boom, the financial crisis in 08, 09, and different cycles. And so been there, done that, gone through a lot, have been very fortunate to have had a lot of success. Uh, but more importantly, and success in different, different time frames as the market changes. But also that success has been recognized. So, we've been fortunate to have in the past received the EY, which is Ernst& Young's Technology Entrepreneur of the Year, Canadian Angel Investor of the Year, which again, are independent bodies looking at what we do, the BC Technology Person of the Year in the past. So there, is a long track record. People can go and look it up and see that, we're not a fly by night. And more importantly, we've lived through multiple cycles and always come out bigger and stronger. One other thing that's really important about Victory Square is our alignment with, in addition to working towards building profit and value for shareholders in the long term, also giving back within our communities. So again, which has been covered, is we've done a lot of, we had a lot of positive philanthropic impacts, not just ourselves, but our portfolio companies and our team within the communities we operate in. So again, there's, integrity is very important to us. And so when I see people kind of questioning that, you want to kind of just refresh that, if you're thinking and you have questions about our experience or values, there's a lot of content out there that from third parties that can kind of validate that we've been doing good and creating a lot of positive value for a long time. Uh, our business model, again, I know that there's investors that are familiar and seen this slide that we've, had in our decks for years. But I wanted to bring it up again because I think it's going to be important to some of the questions that were kind of asked, which revolve around some of the portfolio companies as an example game on. So for Victory Square, we're a venture build. You know, we're operating kind of a venture build model, and what that means is we generally go into areas where we have some sort of expertise or we want to go into. So we've identified an opportunity. Once we do that, we then go to find entrepreneurs or companies that are working in those areas that we can come in as an active investor and kind of support them. So as an example, the healthcare space is something that we've been in since 2016, 2017. And you know, in order for us to go into certain areas, we needed to find subject matter experts, people that we thought were exceptional founders or leaders in that category. And we were very fortunate, for example, to find Shane Madden, who's the founder and CEO of Hydreight. Um, to use a kind of for Canadians out there, a hockey analogy, you've got this Connor McDavid or Sidney Crosby, exceptional generational talent, and I would refer to Shane as that. And what we want to do is provide the support and resources around that player or that person or that entrepreneur to help them kind of get to that next level. So we identify an area that we want to go into, we have experience in, we go and find that talent, and we can find that talent through relationships that we have globally. You know, with I'd mentioned referred to Launch Academy earlier. It was an incubator where we had relationships with 80 other incubators around the world, so we were able to find exceptional talent globally. And we found a number of companies kind of through this, whether it be in Brazil, India, or in the case of Hydreight, Shane, who's based in Vegas. And then we work with that founder. So we provide that support and resources around that founder. Uh, Generally, this process can take anywhere from 12 to 36 months where you're working with trying to get that product market fit, and then get to them to a point where there's a bit of a flywheel. And then from a VST perspective, you know, by month 36, where we feel that if we're successful, that company's ready to kind of leave the nest and scale and grow. And that investment can be in a number of cases. One where, in the case of Hydreight, it's a material investment where we're actively involved as it leaves the nest, and we're, you know, it's a anchor investment, so we're continuing to work and focus on it. And then in other cases, let's say like a Fans Unite, where once it gets to the monetization point, we are no longer on the board or part of the active management. And we become an investor, and we want to see it succeed, but we're not actively involved kind of in the business going forward. But in that investment, you know, we others have heard us. Our strategy is by that point, in some cases where we're not actively involved in the business, we generally want to try to get our cost plus maybe a 20% bump repatriated back into the company, into Victory Square, to be able to reinvest into top of funnel. But then again, hold equity in that we still are hoping, like in a VC kind of scenario, where that company ends up, you know, achieving success. And so during this 12 to 36 month process, it's, you know, we are very actively involved. Once that process ends, some cases like in Hydreight, we're actively involved. In others, the company just naturally finds new shareholders, new board members, new management, and it kind of goes on its path. Where we're at today, so we've, you know, in our, you know, this process started in around 2017. We've evaluated over 1,000 companies. These companies have come from all over the world through the relationships we have built up through Launch Academy. There's about 25 currently in the portfolio. There's been about $13 million of cash invested. The NAV today sits at around 96 million Canadian. I mentioned earlier the big jump from the last webinar to today has really been the increase in the value of the Hydreight shares. And the revenue that we're expecting, and we're guiding towards the end of this year, is around 22 million Canadian. This is a really important question because a lot of people question the NAV and how it's calculated. So it's broken down into three categories. So one is public companies. So it's just basically looking at the public holdings we have. So the number of shares multiplied by the last trade price. I believe this was calculated at the end of November. this number. So it may have adjusted again since then, but this is from November 30th, I believe. Uh, and in some cases with the public companies, there's not as much liquidity, so we take a discount, we apply a discount towards that, and that's how that comes together. On the private companies, VSC has a number of private companies. Every year we go through an annual audit where a third party requires MNP, which is our auditor, requires a third party independent evaluator to come in and value those companies. So we have their valuation reports. And then in addition, we also look at most recent financings, or in some cases, they're management reviewed. And that's how we calculate that number. On the incubating side, these are projects that are, I would refer to as startups. In most cases, they're like wholly owned projects. And we place a basic value on these, generally of about $1 million Canadian, on these. And as an example, we've had companies like most recently Block X, which was sold 4 shares to another public company called Edge Total Intelligence, which was one of those assets that had been incubating. And so one of the interesting things is we over the last couple of years we've have companies in different categories, whether it be blockchain, digital health, virtual and augmented reality, cybersecurity, where there's IP that we have that we just don't have the time to pursue, or two, we haven't found a really good company or founder to kind of acquire to help us kind of go down that category. So in order to maximize the asset, in some cases we will sell it to another company that we feel has the resources to be able to turn it into something, which is great for us because it doesn't really utilize any of our time or resources or capacity, and it would normally just be kind of sitting there, kind of idle. This is a slide that's been updated and it's been there before. Just again for I think some people have kind of questioned VST's asset allocation, and things like that. This is kind of from 2017, kind of how the portfolio has kind of grown, from the number of companies to the unaudited NAV over that period of time. So you can see that, obviously 2020 to 2021 was a big jump year, and I think that was a big jump year for a lot of the technology sector, and equities were kind of riding very high during that period of time. Then obviously within technology, we've seen this internally that valuations and multiples came down, and 22, 23 were some of 24 were slower. We're now seeing a lot of not of renewed interest and more momentum coming into not just technology. So technology companies that have kind of come out of that winter stronger. Example like Hydreight, whom everyone's been following, has done really, really well during that period, and we feel that is going to be an anchor and going to continue to grow, create value for VSC as we go along. But when you can see from 2017 to 2025, there's obviously peaks and valleys towards that, but ultimately our goal is to continue to increase that. And this has been with, approximately 13 million Canadian of cash invested. Some upcoming catalysts, again, just as a quick kind of refresher. One which I think is one that we've been focused on for a while, which now seems to be getting more attention and kind of coming into its own, is Hydreight. I think there's been a lot of interest around their new product and platform that they released earlier this year, which was VSDH1, which is getting a lot of interest to this point. And there's some questions that I'm going to get to in that question format to kind of break down and clarify that for investors. But we really, really feel confident that they're going to achieve their goals over 2025, which will, have a significant impact on VST. And that's because, since that investment in Hydreight, we've seen, from 21 to 22 to 23 to 24 to anyone that's looked at their financial statements, their quarterlies on a quarter or year-by-year basis, they've continued to exceed and grow at an exceptional rate. So, we expect them to kind of continue to do that. Another area that we've been working on in the health space is around the therapeutics side, and there's a project that we've talked about earlier, and we've actually had the founding team of that on a webinar, Ahmad and Dr. Tom Elliott and Dr. Anu from UBC. This is one that we're looking at finding an avenue for them to be listed in 2025. And then there's just new companies that we've been working at on in the digital health space around preventative medicine and biohacking and longevity. A lot of this has been fueled by the fact that, with the efforts that the team at Hydreight have done is they've built this national network in the US. So healthcare is an amazing industry. It's one that we've been wanting to go into and break into. We think the opportunity is significant, but it's very fragmented in the US. So one of the great things that Hydreight did was building this infrastructure across all 50 states where companies get access to a physician, prescriptions delivered to door, and other types of specific healthcare treatments on a national scale. And so what this has allowed us to do is to look at other projects that are great projects, but the barrier to entry is always, can they launch nationally in a compliant and regulatory manner? And then also, if they can, payment processing in certain categories becomes challenging. So we've been able to, from a VST perspective, look at all these areas because Hydreight has built this amazing infrastructure and their VSTH1 platform that companies can kind of benefit and leverage on. One other catalyst that we think and will be good for VST is that the last couple of years have been very, very tough for the technology space. We've seen valuations come down. Now we're starting to see renewed interest. And so we think that some of the valuations that had kind of declined in some of the portfolio companies, some of the stronger ones, will kind of improve. But we expect the bulk of the growth in NAV to really come from the growth of Hydreight and potentially Ensue Therapeutics and some of the new companies. One of the reasons why we think VST is a great investment is, again, you're investing in a diverse portfolio of companies. So not just one, you're getting exposure to a number of different areas that we're in. So as we've seen, companies go up and down, but the fact that there's a diversified approach always tries to keep kind of value within that ecosystem, so you're kind of hedged. Um, uh, and then, again, our team has been around. We've done a lot. We've been through multiple cycles. We're able to kind of navigate through, through that adversity. And if you are an investor and you want access to some of these different asset classes, um, you don't have to necessarily have accredited investor status or be geographically located, beside a specific startup, or have the cash flow to be, part of a large, let's say, VC fund. You're able to do this through VST and get exposure. And VST is audited, and it trades in Europe, the US, and Canada. So you have that liquidity. Whether you're happy with the investments or not, it gives you that ability. And I think currently right now, uh, we're trading at a discount to what we, believe our assets are worth. And one note, I heard someone make a comment actually, which I thought was really telling. We generally look at our assets based on like what their mark to market is. The nano cap space, micro cap space is very, very inefficient, I think, in that, sometimes companies are valued less than what they truly are worth just because it's a very illiquid market. Sometimes they're valued more than they should necessarily be valued at. We generally look at that mark to market and then third party kind of valued companies. But in some cases, companies that have performed at a certain level generally get a forward looking kind of valuation. So when you look at certain multiples, I've referenced Hydreight a lot here just because it's getting a lot of attention. We've seen multiples in that sector between 4.7 and 5.5 times gap revenue, which would have it trading higher. And that's generally on forward-looking revenue, especially when a company's kind of delivered certain growth consecutively over 3-4 years. So we think that again, there's a lot of value to be unlocked in there. So it's a great time to look at VST. Thank you. I'm going to get to the questions now, just because I want to make sure I have enough time to get through everything. Am I still sharing my screen? Can someone try to want to pull to the question side? Here. I just froze for a second. Can you guys hear me? Sorry, it froze on my side. I just want to make sure. Oh, okay, perfect. Okay, I haven't frozen. Okay, thank you. Uh, so let's get to the questions. Okay, so go. So there were a number of questions. I kind of took the liberty to organize them from into like groups, like Hydrate, Game On, and then Other, just because they all kind of fell within that category. So I'm going to start with Hydrate and start with some of the questions that I thought are the most important. So uh, there were a lot of questions around. So please give us the three-way ownership percentages in VSDH1 for each partner. This is must-know information. Uh, please explain VSDH and VSDH1 IP and the financial arrangement with Hydreight. So VSDH1 is owned by Hydreight. The VSDH1 IP is owned by Hydreight. Um, Hydreight has a number of resellers selling the product for them. Uh, Resellers can earn between 5 and 33% of the profit. And it depends on what that reseller does, how much work that reseller does in marketing, spending hard marketing dollars to land that client and any sort of follow-on work with that particular client after. But the VSDH1 IP is owned by Hydreight. Hydreight has a number of resellers. Those resellers can make between 5 and on the highest end, 33% of the profit. And that all depends on the amount of work that they are doing. VSDH, which is wholly owned by VST, earns 10% of all the profit across the board. Um, and just remember, VST owns VSDH, wholly owns it, and VST owns roughly 65% of Hydreight. So I hope that was clear. Um, it would be good if Hydreight could update their YouTube page and add recent investor webinars to their website. Yeah, I'll make a note to the team there. They've been overwhelmed and extremely busy, especially as we're getting to the end of year, and ensuring that next year is a banner year for them. So I'll make sure that their team gets that updated. Nurse needs to do more IR and publicly accessible videos that are not over a year old. Um, yeah, again, tied into that, I think. And I just this next question, I'm just going to ask, just reference this and then answer it all to kind of gather. Is Hydrate management going to set up a call to discuss Q3 and clarify a lot of new questions new shareholders have in regards to VSDH1 ownership splits and 2025 targets? Yeah, so to all of that, I would anticipate news coming from Hydrate very, very shortly. I would expect a webinar early January. It's just an extremely busy time for them right now, but and I was actually gonna try to get Shane to jump on today, but again, if anyone sees his call schedule, he's on back-to-backs from like 6 a.m. to like, I'd say like 7:30, 8 p.m., and then he goes into dad mode. So, but I would expect communication very shortly from them. I would expect a webinar early January, and in that webinar, I would also anticipate seeing the medical director and other key members of the team that can talk more in depth and really validate this opportunity that they have with VSDH1. So from their medical director to their pharmacist and others on that call to kind of support Shane and answer questions that other investors may have as new investors come into the category that might be more knowledgeable in that specific space. So they may have more specific questions. So I would expect that with respect to their website, updating their videos, that I would imagine again will get done in kind of due time. I'll make a note to them about that. Uh, VST has some contracts and related party transactions with Hydreight. Can you discuss how VST collaborated with Shane Hydreight to help it become what it is today? So, contract-wise, VST has had a consulting agreement with Hydreight for CFO and controller services. And this was set up before Hydreight was even public. So at one point, VST had acquired Hydreight and owned 100% of it and had those services being done for Hydreight. And when it went public, the CFO and controller services just kind of continued, and it's just a monthly, basic monthly kind of stipend to kind of cover those costs. Um, with respect to the support, I kind of referenced this in the deck, but VST has been in this category for a number of years. I'll share a link from 2017 uh, where VST had made an investment in a project called Personalized Biomarkers, where we were looking at GLP-1s then. So digital health, personalized medicine, online pharmacy, all of these different types of things are things that we've been working on for a number of years. But what we were missing was that Sidney Crosby, that Connor McDavid, or in for our American investors, like the NFL equivalent is like finding that generational quarterback, which just so happens Shane's favorite quarterback is Tom Brady. Uh, I'm not a Patriots fan, by the way, but just as a thought it was funny. But yeah, so for us, what we were lacking is we wanted to go into the space. We believed the space was going to be significant, but it was really finding that exceptional person or entrepreneur that had that vision and the ability to kind of know how to navigate in that area. And that was Shane and Hydrate. And so we've been able to, over that, I kind of showed that 12 to 36 month time frame. Hydreight came into the VST family in 2021, and it's basically 36 months now, 3 months, sorry, 3 years, from that, just a little over 3 years from that time frame. But we were able to kind of support him with the experience and funding to help him kind of achieve that goal and bring us along for the ride. So just specific examples, uh, people that are VST shareholders would have probably connected with Vahid Shababi. Vahid has had a huge career before on helping build SaaS companies and growing SaaS companies. And him and Shane, again, like Shaq and Kobe, they hit it off really well, minus the when Shaq left for Miami. But they collaborated really well where Vahid was able to come in and kind of really help take certain things off of Shane's shoulders and really work on scaling the SaaS product that they had and built. And other players on our team were able to kind of come in and help support on other areas, i.e., CFO, controller services, really handle kind of the back office and accounting, so Shane could really focus on building out the vision. As a startup founder, anytime you can build a supportive cast and team that is really, really good at what they do, and you can focus on kind of executing on that vision, it really, really increases the probability of success, especially when funding comes, and supports that. And we were very fortunate that anyone that's looked at Hydrate is they've operated efficiently, very efficient, very lean, very fiscally responsible, and have grown based on cash flow. So for us, we knew we wanted to be in that area. We were very lucky to find Shane and Hydrate, and then we were able to kind of support him with our team and some financial resources and some expertise to kind of help him get to where he wants to go. And now we're just very fortunate that we get drag along rights to be able to kind of like go along with how he and the team kind of take this Hydrate on the next phase. So now those are the questions kind of more related towards Hydrate. So I'm going to shift. There was a number of questions around Game On. So there's a bunch of questions here. I'm going to kind of just like share them, and then the answers are very, very complex that I'll get into. One note, Game On is a public company, so I have to be very careful about things that I'm able to actually share and not share. So just as just to reference that point, I have to be, obviously not kind of say anything that might put me into some hot water and VST into hot water. Can we get an update from Shafin regarding the deal since Matt Bailey seems to have left the boat permanently? Um, Wondering what's your take on Get and what feedback can you give that shareholders won't get hosed? Today, I noticed Get was halted. My frustration is you were telling shareholders a couple of quarters ago how profitable it was. Now it is bombed. How do you answer investors' questions about VST's reputation after the failures of Game On, Fans, Anon, and VRAR? So a lot of questions, and I'm going to answer this as best as I can. So with Get, first off, we really believed in what they were trying to build and Matt's vision. For anyone that's followed the story, VST and Get went public. Get went public in June of 2021. And the focus there was they just come out of a Comcast accelerator. And our interest was they were building tools on Comcast's set-top boxes to allow for a social TV viewing experience. Why that was interesting to us was a Comcast, huge, large telecommunications company in the U.S. Um, broadcaster. They had set-top boxes in a number of homes. And we started to see that streaming services were taking a lot of business from, let's call it static TV. And we thought that making these experiences more social would be a way for those traditional TV to keep up to speed with what was happening and the amount of business that was being taken away onto the streaming services. It also gave a new kind of form of advertising opportunities. And at the time, they were focused on Desperate Housewives. I think it was Real Housewives, where you could watch the show and there'd be questions and you could compete against friends as you watch that. Now, I'm a huge sports junkie, and so we saw the applications around fantasy sports being significant, and that's why we kind of invested in it. And they went public in June of 2021. Now, normally VST would look towards uh, selling some of our interest to bring back whatever our cost-based investment was in there. And I think our cost in Game On was very, very minimal. But instead of doing that, we issued a share dividend. So we gave shares to VST shareholders proportionally based on the shares that they owned. Now, the only cost base for shareholders would have been if there was tax implications for investors. Um, when we did that and when Game On was public, I think our ownership was around 18%, and we retained a board seat, and we kept actively involved in the business. As the business kind of progressed, the business model changed and they kind of shifted their focus to a platform that they were building around this game token. They went after great leagues. We saw a lot of momentum, a lot of positive momentum, and we felt good about what they were doing. One of the challenges for Game On though is they were shooting for an ambitious vision, but the microcap space kind of declined and the share price declined. Their ability to access capital without, dilution became a challenge. And I think financially, there was some challenges there. Up until recently this year, VST generally shares news releases that we believe are material that are put out by our portfolio company. So when Game On issued a news release about record revenues, we shared and repurposed that for our shareholders to be able to be updated. And we felt very good. I mean, one of the things in our last webinar that we talked about was there was a token event that they had in June, which I think was going to be uh, very significant if it went well. And I think that was kind of that's what really kind of triggered them into a downward spiral because the token listed, they had the product, they had the partnerships, token listed. Anyone that followed it, it immediately kind of crashed and burned. And I think that cash flow and revenue that they were expecting from that token listing and token sale really hampered their ability in the short term. And so they kind of got, spiraled, they went into this death spiral. Now, one of the unfortunate things is we see this happen with companies where they go through this up and down spiral is communication, right? We really would have preferred the CEO, Matt, to be more active, be more communicative with shareholders, walk them through this process, and maybe it's disclosure related issues or not. But that adversity sometimes can be daunting for certain founders. Our preference is, it's best when you communicate or over communicate during those challenging times to clarify for investors. But I think that's where a lot of investors have lost kind of faith. Um, Currently for Game On, we are there to support them. There's a process right now where they're in a CTO, so the stock has been halted. We're working with them to navigate that, to get unhalted. and working through, some of their challenges around, some of the debt that's kind of overwhelmed them. And we're not going to give up. It's still an investment of VSTs. We know that we have shareholders in it, and we want to help them kind of navigate through this. But again, it's very challenging. We work with them, we get them to that spin out, we help them with, raise capital, we kind of support them, but ultimately, like, we have to focus on VST. We're not getting paid by Game On, so we can't, spend we couldn't have spent too many of our resources and times. We look at all the financial statements, we believed in what they were trying to do. I think they hit, a really, really unfortunate spell there. But we're still there to try to, resuscitate it and get it out of this, get it out of this challenging period of time. So now there were a couple of other businesses mentioned there. Now, in the case of Game On, when it listed, it did trade up. I think even last year, as much as last year, I think the stock even went back up into the 20s. So it's very hard for us. We were not VST was not selling in that we distributed the shares that we normally would have kind of sold to our shareholders, and I hope shareholders, there was zero cost base to them except for any sort of taxable implications. And I hope that shareholders would have, been able to kind of take some money off the table on that, to get liquidity, because it becomes very, very difficult, especially in an investment like that where we move down to, 18% ownership. And apart from one board seat, we're not really, actively involved kind of in the day-to-day business. So it becomes very challenging. Someone referenced fans. This is one where I think I I would disagree with people's commentary around, VST's responsibility around fans. Fans was in the portfolio from 2016, 2017. Again, we invested in them. We were really bullish on them building this, a sports book on the blockchain. When crypto winter hit in 2018, they kind of pivoted that business model. They went public in 2020. In 2020, I think around 25 cents a share. Uh, the stock within the first year of trading, it traded over 100 million shares. I think the stock hit a high of, low $2 a share kind of price. So lots of volume. There was lots of institutional financing done during that period of time. We were no longer on the board. VST probably, recorded over $5 million Canadian of gains on the during that whole process. Just to note, our cost base on fans in 2016, 2017 was an all share transaction, which was, I think, around between 1.5 and 2 million VST shares. Um, and it was a great outcome for us. But, you know, over the last I would say since the end of 2020, we were not on the board, not involved in management. We were just a shareholder, and our shareholders, if they had come in at that 25-cent range and sold within that period of time, I think would have done, extremely well. So it's a tough. That's kind of tough. We couldn't really control what happened to the business with no board or management involvement over the last couple of years. And I think again, they were in good shape. They'd raised institutional capital, markets turned, and I think they might have gone awry with some acquisitions and some debt that they took on that created some challenges for them. Uh, in the case of Anon, uh, that was an investment. VST sold an asset which we received shares for, which again, the asset really, had no cost for us. And even though their shares have tanked, I still think we probably made 300 or 400 grand off of that. But again, no active involvement in that business. VRAR, that is one where, again, it is a material investment. That's one that I feel like we dropped the ball on. I should have had more oversight on them. I think it was they were in a great category. They had, we'd raised them good capital. It's debt that they had taken on that had kind of, had a negative impact on kind of their spiral. But that is an investment that we are more actively involved in kind of working through. And, that I should have had more oversight on that, as it was a material investment for VST. But the writing's not on the wall. We still want to get that kind of resuscitated. So, I think our process is this 12 to 36 month time frame. Once we get to that 36 monetization perspective, if it's an investment that we have a minor stake, we do our best. we either want to get liquidity by being able to kind of sell our cost base plus a bit of a profit, or distribute it, like in the case of Game On and VRAR, to shareholders. But when we have a material stake, like in the case of, let's say, Hydreight, we're actively involved in that business. And in the case of VRAR, that I gotta take responsibility for not having more oversight on that. But again, we are actively involved in that file to try to support them and help them get through. And just on a reference note, there weren't any questions around VRAR in particular, but a lot of what they have been working on, I think we share this AI avatar kind of uh, clone, these digital twins that they'd kind of been working on. Where they started getting traction, surprisingly, in both the VR and AI side, is in the digital health space. And we think we're going to push them and nudge them to go deeper down that sector, just because of the infrastructure we have there now with VSDH, Hydrate, VSH in Brazil. We think that we can really support and help them get traction in that area. Um, when was the last time VST did a private placement, and at what price? What actions have you taken since then to avoid further dilution? So the last time VST did a private placement was in November 2020. So in November 2020, the company raised around 6.1 million at 52 cents a share. And I believe there was a half warrant at 78 cents, which I think is expired. That half warrant was at 30, sorry, was at 78 cents for 3 years. Now, just to note, two things about that. One, I participated in that financing. I think to the tune of about $500,000, which I still hold my shares in that. Two, uh, the VST share price, and I think we did that with an investment bank, Gravitas. Uh, but the share price over the next 6 months, both the volume and the share price was very robust. I think the stock might have hit a buck 21 after that. So all of those investors that came into that financing would have, been able to benefit and profit from that. Fr from that. Um, One of the other things is that was November 2020. We, I think, closed the Hydreight transaction in January of 2021, roughly. And part of the capital from that was used to kind of support Hydreight through that first year as we were kind of transitioning and helping their business. So that was the only financing that had been done. And I kind of alluded to this, but our model again is is this 12 to 36 month kind of time frame. When we hit that time frame for VST, we want to either take money off the table at a higher valuation. So again, we did this with Fans Unite. We did this with Argo Blockchain, where we're then able to take that capital and reinvest it into top of funnel or new investments or incubating new things. Or two, we do an equity raise, which I referenced in November 2020. We did that when the share price was, I think, around 60, 65 cents. We did it at 52 cents, brought in some new capital then. And in other cases, to avoid dilution. Like, so for example, today we would never do a financing at these prices because we would not want dilution at these prices, especially when we feel like we're significantly undervalued. We would access strategic debt where we're able to utilize the assets we have to raise strategic debt to grow or take advantage of opportunities. And part of that is also uh, again, people that are familiar with the VST story, uh, prior to that November 2020 financing, I'd set up a $10 million convertible note where I was financing the business's opportunities that they had, and so forth. So the business was never really in a position where it couldn't take advantage of opportunities that it kind of, were presented to it. Uh, how is it that you acquire shares of a company like Insu Therapeutics for VST? If it is in exchange for guidance, why didn't you just work with them on the side and keep the shares for yourself? What drives you to care more about the success of VST more than your own personal wealth? So, a couple of things. I've been in the tech space for, oh my God, like not today, like I think since '96. So we're talking a long time. I've been through multiple cycles, been very fortunate to do well. One of the things in that journey, and generally that journey was always private, building our own private companies and cash flowing them, was that and we were investing in building things kind of globally, was that people didn't have access. Most people would not have access to this asset class of early stage tech startups, especially given that in the late 90s, if you were a tech company, you generally were public. And then an angel ecosystem and VC ecosystem was developed, which then prevented companies from going public until later on. Now there's a lot of crowdfunding sites and things that have popped up to kind of offer this asset class to those types of investors. So for us, one of the motivations was to build something that investors around the world could co-invest with me. Because again, the initial investment and initial portfolio was built by funds that I provided to the business to invest in. So this would allow investors around the world to invest alongside me, which started with friends and family who wanted to do that, and make investments into obscure spaces. So again, I'll share a link. Like we were looking at personalized medicine and GLP-1s in 2017. We were looking at crypto in 2014, 2015. So these are categories that are like, again, we're not built out, very high risk. But what this allowed people to do is to invest alongside someone with skin in the game, get exposure to a number of different categories because, the failure rate for startups and the failure rate, going after certain areas that are high growth areas is very high. So this, allows you to have a risk adjusted, diversified approach. So that was the motivation to give access, people access to this. And that's my motivation is to see that through and have people, do well by that. Um, Now, in the case of Insu, there are certain projects, VST, I have to be very fiscally disciplined with how we utilize our capital and our resources and time. And so for the last couple of years, we've been really focused on like, the health space and specifically Hydreight. So our team, whether it be Abby, Vahid, everyone's really there to kind of support Shane in that quest. And that was a great bet for us to make. But so we have to be very calculated with the time and resources on that we use. But there was an opportunity that we saw in these categories, specifically with Insu, that I wanted to pursue and fund with my time and my own kind of financial resources, especially because I knew the team and I'd worked with that team before. Um, so that we don't, lose out on VST doesn't lose out on this opportunity. So in the case of Insu, yeah, I could have taken it, personally, but my motivation again is to build this within VST. I am the largest shareholder, and I do believe that companies like Insu, when they're in a public vehicle, um, that and that market or that area becomes interesting, it has a huge um, uh, multi-bagger type of effect on those types of stocks and share prices. So I think it's going to benefit not just all shareholders, but myself as the largest shareholder as well. But in those cases, and there's other cases like that where there's opportunities, but I don't want to waste VST's resources or time on it. I'd rather them focus on something that's currently working. And then, for myself, I will spend that time and navigate it. Because if it doesn't work out, great, no harm, no foul to VST. But if it does, it's something that we can bring in and create value for shareholders, which, I happen to be the largest shareholder. Um, the Q3 earnings were a turning point. Do you expect the financials to keep improving? One thing that's really important for VST is that our financials are very, very confusing and very messy because of the nature of our business and IFRS accounting. Now, the KPIs that we track more closely are cash invested, net asset value, return on invested cash, our share price, market cap versus, let's say, an index benchmark, and kind of operating costs at a percentage of NAV. So like those are the metrics that we generally look at, and we feel good about those numbers continuing to grow. So I referenced in one of the slides since 2017, I think we've evaluated over 1,000 companies, invested in 25, cash invested in around 13 million. Current market unaudited NAV is about 96. So we've grown from 4 million in 2017 to a NAV of about 96 today. And our goal is to continue to grow that NAV going forward. Uh, from a financials perspective, we do expect the financials to continue to improve though, given that we've deconsolidated VR AI. So that's one, and I kind of communicated that in earlier webinars that our goal was to deconsolidate VR AI, which was bringing on a lot of debt onto our balance sheet. So in Q3 in particular, the deconsolidation of VR AI was helpful. The growth of Hydreight had an impact, and the sale of an asset, which was the BlockX asset to Edge, and just the growth of some of the portfolio companies in value contributed to that. I do expect the numbers to continue to get better. We're very optimistic about 2025. I referenced this earlier. We really think Hydrate and VSTH1 is going to create value for them, which again lands on our balance sheet as well. So we're expecting the financials to improve. What are you most excited about in VST today? Uh, Specific cases, I'm excited about Hydrate. I'm excited about its expansion of VSDH1. And normally you see companies with these hockey stick curves or these forecasts, and you want to like, you gotta, take a, kind of a close look at the reality and plausibility that they can achieve that. In the case of Hydrate, what excites me about that in VSTH1 is if I look at their performance over the last 4 years, consecutively, quarter by quarter, year over year, they've knocked it out of the park. And because I can see firsthand the opportunity and the gap that they're servicing, that excites me. So not just the projections and the forecast, but the action to date, given that they've consistently hit their targets, and just the adoption and reception to the VHH1 product. I'm excited about Insoo Therapeutics. I really love the healthcare space, and I love the digital healthcare space, the therapeutic space, biotech, life sciences. I'm older now, and so I'm starting to like really appreciate that area. So more so from an investment and opportunity. Also, there's a general interest in some of these things. So I'm excited about Insoo and what they have in store. There's some interesting things they're working around with. So everyone knows that everyone that's seen the webinar, there's a patent that they worked on with the University of British Columbia around buccal delivery of insulin or oral delivery of insulin, but it applies to other types of injectables like GLP-1s, testosterone, and other areas where, again, I think there's considerable interest and opportunity and a huge market for that. But and the comps in that sector are great. But one of the other things too is given their team and the things that they get exposure to, there are other projects from, needleless CGM or, CGMs that, where the cost, is under $10, which, can become significant as a consumer product out there. So there's some interesting things that they're doing and working on that excite me. And I'm excited about new projects in the health space. So this infrastructure that Hydrate's built up opens the door for investments that can be made. So when we look to make investments, um, we can invest in a company that may have customers, but we know that if we plug them into this platform that Hydrate's built, that their cost of product, their cost of doctor visits, creating, helping ensure that those barriers of always having access to physicians and payment processing and being able to operate in a regulated space is significant. So some of these new projects we're looking at, we have a competitive advantage in that we can like leverage or license or plug into an ecosystem for one of our portfolio companies that is navigated this. And just to touch upon this, I think I've shared this in our Discord channel, but A16Z, Mark Andreessen, one of the most successful venture capital firms out there, in a report, I think this was in 2023, they referenced that they think the biggest company in the world will be a consumer health company. And they referenced by saying, when you look at four of the top five biggest companies in the world, they're consumer companies. But healthcare is one of the U.S. nation's biggest industries. So those massive companies from Google, Apple, Facebook, Amazon, they're all working to move into healthcare because they realize the size of the op. Like it's a $4 trillion American industry. I think it represents 20% of GDP, which is 5 times the size of the advertising industry globally, which pretty much makes up all of Google and Facebook's value. Um, but healthcare is complex, it's fragmented. And for a lot of these companies, it's very difficult for them to navigate. Anyone that's followed Amazon's story, they've made some M&A opportunity, some transactions in that sector. Some have not worked out well, but for them, going in on their own has been a bit of a struggle. So we think that we know they're gunning for that category. We know that category is significant, and they may enter into that category because of M&A opportunities. And so when we look at what, our portfolio companies, specifically Hydreight, has done, we feel very, very good about an opportunity for us to be a major player in that. So that excites me really around all the health stuff that we're doing. Market size is big. We can see again. I know I'm going to get people ragging on me for this comment because I remember using this reference point, hockey reference, where the puck is going, not going where the puck we think the puck is, where we think it's going. And so all the trends are pointing towards that. But for the first time, we have players that can get to that puck, and have the capacity to not only get that puck but score. So that is very, exciting for us. Uh, why do you believe that there is such a disconnect between the VST NAV and its share price? I think a lot of this has to do with and I know people will disagree with me. I've seen comments where people have said where there's, the lack of VST's reputation or trust, or or my performance or asset allocation. Like we can see what anonymous people online are saying on forums, but ultimately, like when I look at the fundamentals of our business, they've never been better. When I look at the performance of our share price over, let's say, the last 7, 8 years since 2017, I've seen our share price go like this. So like if people have watched it, they've seen maybe the blockchain theme has jumped the share price, and then crypto winter hints and it goes down. Then we'll see sports betting and COVID test, spike the share price again, and then the share price gets kind of declined. So our stock's been up, our stock's been down. But fundamentally, the metrics of the business are better than they've ever been. So to me, the disconnect really is I've seen when momentum comes into the microcap space or the nanocap space, we generally benefit from it because we're in one of the categories. We're always in one of the categories that is doing well or attractive. I mean, just looking at whether categories that are other than resources like blockchain, sports betting, digital health, COVID testing, GLP-1s, AI. Like we're lucky that we have anchors in those types of categories. So I believe that our stock price is benefited when momentum and volume comes into the microcap space. What I'm hoping though is that you know that that with, let's say, the renewed interest in Hydreight, that new eyeballs will come in, will lift that company share price and market cap out of the nano cap to maybe a micro cap and even larger, which then allows institutions to come in, brings more interest into the category, which then we believe will cause VST to retract. But from a fundamental perspective, because when you go from retail to institutional, when you get to institutional, then it becomes more based on your fundamentals and number. I feel like right now with the micro cap and nano cap space, a lot of it's theme, volume, momentum driven. And so the hope is that the performance of Hydreight can help break VST, and have it retract out of that, out of this kind of this circle, and be more based on kind of, let's say, fundamental metrics. Um, I just realized, sorry, we've gone over time. I'm gonna get to one last question. And if I didn't get to questions, please feel free to message me on the by email at shafin@victorysquare.com or on the Discord channel. I'm gonna post a link there, though I want people to reference something that I was mentioning, having been in the personalized medicine GLP space since 2017, which is just a testament to the fact that like we didn't just fall into these categories overnight. What keeps you up at night in relation to VST? Uh, to be honest with you, I'm excited about what we do. I'm an optimist. I'm a glass half full person. I think if there's something that keeps me up at night is that um, I know that the sentiment towards VST, in most cases by our shareholders, is tied to share price. And this can have a negative or positive impact on how someone feels about the company and just in general because it's your finances. And so I think for me, the thing that keeps me at night is like I want to see investors do well. I'm not selling stock. I'm invested in this. I'm there for the long haul. Um, but I want to see our investors do well. Like I get, I think when I feel bad for investors that we have that are supporters of us, that are out there communicating, um, speaking positively, trying to highlight things we're doing well, calling us out on when we're not doing well, but highlighting the positives and them getting kind of ragged on by others. And I really like want to deliver a win for our shareholders. Like I want our shareholders to be proud to be shareholders, and I want them to be praised for the fact that they were on this and they stuck by it, as opposed to people calling them all different types of names and things like that. Like I'm very supportive and appreciative of all the investors we have, and even the ones that say negative things about us, because again, I still want to deliver. At the end of the day, I still want to make sure that we deliver value for people. But I think if anything that like stresses me out or keeps me up at night, it's that I feel bad when I can take criticism. I don't mind people calling me names or questioning me, but it's when they question our shareholders for speaking up on our behalf that kind of like keeps me up at night because I want to be able to deliver for for those shareholders. Uh, Thank you, everybody. I apologize. I went a bit over time there. I'm really sorry if I didn't get to all uh, the questions. Uh, uh, please feel free to send a note to on the Discord channel or email me at shafin@victorysquare.com if we weren't able to get to your question. Actually, I had a there are a lot more that came in. I I can stay on. So if anyone, this is going to be recorded. So I want to, if someone just sent a note, please stay on. So I'm going to try to stay on a bit longer and go over these questions. So, but if anyone needs to drop off, it will be recorded. Um, so uh, the CEO of Hydreight said that that Hydreight owned 100% of VSDH1. He said VSDH1 got a 10% income share from VSDH1, but only for customers that VSDH1 touches. This contradicts your earlier statements. Can you please clarify that VSDH gets a 10% net income share? Okay. VSDH1, the VSDH1 IP is owned by Hydreight. Uh, Hydreight uh, has a bunch of resellers. Those resellers can make between 5 and 33% based on what they do as part of that reselling contract, whether it's marketing dollars that he or she is spending or the work that that reseller does on pre and post contract. So a maximum of 33, but down to 5. VSDH gets 10% of all profits. And sorry, let me just reference that 5 to 33% is off of profits. VSDH gets 10% of all profits across the board for VSDH1. Um, VST owns 100% of VSDH, and it owns roughly 65% of Hydreight. I hope that answers that question. Um, and if I didn't, like, feel free to just jump in. That need clarification. Does VSDH get 10% of all net income from VSDH1? No, from all, not just customers that the question was asked, need clarification. Does VSDH get 10% of all net income from VSDH1 or 10% of net income only for the customers that VSDH touches? VSDH gets 10% across the board, not just the customer it touches. And um, when we first looked at the VSDH1 project, the income split was going to, profit was going to be a bit different because VSDH was going to be more active, more proactive in going out there. What we realized again, and I kind of alluded to like resources and time, Hydreight had the team, the expertise. Resellers were reaching out to them, um, and they'd solved the payment processing challenge with their partnership with DSV. So the arrangement for VSDH was that we're going to let them handle all of that. We will take 10% of all the profits across the board. So VSDH is not actively going out for resellers on that right now. That's being handled by Hydreight, and it's got a ton of resellers that have kind of reached out to them. Um, uh, so this is what the way the question is written, and I'm gonna read it the way it is, but it says that scammer Matt Bailey was touted in high regard. What do you say now? He's shown his true colors. What Game On's going through right now is unfortunate and it's frustrating for shareholders, and I think even more frustrating that there's no communication from them. But I can tell you that in my time with Game On, there was no plot or plan to for this to go sour or to mislead investors, or like that wasn't the intention. I don't agree with the lack of communication, and I know there's efforts right now to continue to kind of to get through this choppy period. But um, uh, I've seen this before where some team or some CEOs, they they adversity can kind of have a negative impact on them, and they instead of over communicating or communicating, they kind of just kind of get hold in. And then in public cases it's sometimes even challenging because there's also disclosure challenges and issues. I would not say Matt Bailey's a scammer. I think Matt um you know worked hard, continued to work hard. Some of the decisions that might have been made were not the best decisions, but I don't think there was any sort of intention there to scam or screw people over. And I know right now there's still efforts to try to create the best outcome given the challenging situation. Um, uh, Shafin, what's your share price target for 2025? Many shareholders are deeply underwater and drowning. I don't really have a share price target for 2025. I think it's really hard to kind of guess where the share price is going to be. What I'm focused on with it is I know that our fundamental metrics will be better. So I know that whether it be on the from a financial perspective, our revenues to I think that I feel confident that the value of our assets are going to increase. Um, but the share price will be a byproduct of just momentum and investors, in my opinion, coming in. So I feel confident. I think Hydrate's doing all the right things. I think new eyeballs are coming onto them, and as they continue to execute, I think the increase in their value will, in a byproduct, impact VST positively. But it's very hard for me to I apologize. I don't really know a share price target, but I do feel confident that the fundamental metrics of the business will improve, and hopefully that will result in people investing in the stock. Uh, VRAR is a joke. That's more of a comment. Again, I understand people's frustration with VRAI, XR immersive tech. I don't think it's a joke, and it's in an unfortunate situation right now. But we'll again, instead of focusing on the problem, we're going to focus on a solution with it, which we have been. And the biggest challenge that we have there is restructuring the debt that they had taken on in 2021, which has really kind of hampered their ability to kind of move forward. So we'll continue working with them. What about solar? So Stardust Solar, which was a company in the VSC's portfolio, listed earlier this year. Share price has declined since it's listed. But again, if anyone's following their financials that they released, the business is growing. I think their expansion into the US and just the focus around energy, and I think with the new Trump administration and their in looking at alternative energy sources. Um, uh, I think it's going to do well for the solar sector in space. Um, uh, with the investment and sorry, with not the investment, with the uh, feedback and interest of Elon on the U.S. administration. I think again, Tesla is a player in the solar space, and they're actually a partner of Stardust Solar. So I feel good about them. I think I would highly recommend again people reach out to Mark Tadros, the CEO of Stardust Solar, for any specific questions about their business. But we're bullish on energy, alternative sources of energy, and we like that sector in space. Um, when will you buy more shares? If we are such a bargain, why is no one buying? Um, when will that's like two parts to that question. Um, I'll probably look towards buying shares again come early next year. I think there's a lot of catalysts that have been kind of coming to fruition. One of the challenges I have is given that my involvement in VST and my involvement on the Hydreight board and our like VST's kind of operational involvement in the business, that we fall into blackouts quite a bit given the material news that generally happens within that portfolio company. But I do expect to jump back into VST next year. The second part to that question, if it's such a bargain, why is no one buying? Um, you know, we sat in the doldrums, and it was painful for a lot of investors. Now, recently, the stock is improved. Pricing and volume is improved. I know not to the level that investors would be, the investors that have been in the stock for a while would be happy with, but again, it's progress. I think 2025 will be a big year. Again, it's about execution and deliverance. If the portfolio companies perform well, it should force VST to retract as new eyeballs come and look at that as an opportunity too. So, uh, I think this is just a place where we've looked and we've seen appreciation. And just one note too is that appreciation has come because one of the portfolio companies has performed well. So when we spun off VST, part of, if anyone can remember, one of the reasons we did that was it was Hydreight was getting no value in within VST. And so by spinning it off, the hope was that we would unlock value for VST because it wasn't contributing to any value on the balance as an asset then. Two, new eyeballs, right? By having it spun off, as that business increases, new eyeballs come on to Hydreight, which brings new eyeballs onto its parent VST. So we've seen that in the short term have an impact. If they continue to execute in 2025, we think that impact will continue to increase on VST. Why don't you sell NERS shares and buy VST? Um, we believe that there's again tremendous value there with NERS. The only thing that I think we've talked about this since NERS spun off. Uh, the only reasons why VST would sell NERS wouldn't actually be to sell, but it would be part of arrangements that were made at the very beginning, which might contribute to a max of potentially 2 million shares in total, with restrictions and holds towards the company achieving certain milestones where there would be bonuses kind of paid out. But apart from there, I see no need to sell it at these levels. We think that there's again still tremendous room for it to grow. Um, Hydreight at $1 a share puts the market cap at 40 million. I think their top line revenue they're going to close out this year with between 22 and 24. Uh, uh, that's what like two times top line revenue. And if you're looking at gap revenue, maybe three times gap revenue. Uh, like average companies in the sector are trading between 4.7 and 5.5 times. Like, why would we sell it and create any sort of downward pressure on their share price? It makes no sense. Uh, let's get to basics now. Nurse went up 10x. VST goes up 10%. Why? Again, that's a share price thing. I don't know. Nurse went from, I think it was hovering within the 25-cent range to, let's say, $1. So it's gone up, let's say four times that value. VST was at 8 cents and it's gone to 16 cents, or 15 cents right now. So again, I don't have an answer for that. I don't know how. I think again that's one of the things about the nanocap space is it's an illiquid space that a lot of arbitrage opportunities are found here. Um, given that given that's the case, so I don't really have any other answer to that other than, hopefully, sooner or later, as Hydreight continues to perform, VSC share price will retract. And again, historically, like we've seen VST's share price trading higher when the fundamental metrics were lower. So again, I don't know. Uh, Shafin, your puck is invisible. Come on, man, just stop. Okay, I figured that I was gonna get one of those comments. Uh, what keeps you up at night? Now, I answered this question, but this is reference to should be shareholders who trusted you losing their life savings. So a couple of things. One, uh, that is one of the things that keeps me at night, which I reference, which are shareholders. It's shareholders that, again, have given their commitment to the company, and we want to see them do well. Um, you know, from an investment perspective, I think like as an investor, you you invest in a company. This is one of the whole purposes of a reference. VST was created to give investors access to early stage companies in a liquid and transparent and audited way. VST has to file quarterly and annual financials. So we do that. And so I think investors that have invested in VST that are looking at the fundamentals of the business, um, I don't know what their time horizon is. So if they're investing long term, I would feel good. If they're investing on a quarterly basis or wanting the share price to go up in the short term, that's something that we can't really control. Again, we've seen the share price go up and down over the last 6 or 7 years. Sometimes we have no understanding as to why it's gone up, other than we just feel that there's momentum and there's a theme there that people get really excited about. But ultimately, it does keep us up at night. We are continuing to go to work every day. Um, and I think in most recently we've seen some momentum. Hopefully we can keep this in. But yeah, again, we want to see this turn around. I think that is what stresses me out is I want to deliver for shareholders. Um, okay, this question again. So need clarification. Does VSDH get 10% of all net income for VSDH1, or 10% of net income only for the customers no, VST gets 10%, VSDH gets 10% of all profit from VSDH1 across the board. So you're the not for just customers VSDH1 touches. VSDH gets 10% of all profits from all of VSDH1 across the board. Um, uh, if there's a clarification you want, I can even send that clarification to. So I think this is from Derek or Ben. Feel free to send me an email to Shafin, Shafin at victorysquare.com, and I can email Shane Madden, the CEO of Hydreight, and even further clarify that. But VSDH gets 10% of all profit from VSDH1 across the board. Um, I'm an institutional investor, maybe the first in Nurse. Just bought 2.7% of Nurse share count so far. I have too difficult a time feeling comfortable buying VST. Um, you know, if you do, I mean, obviously, first off, thank you for your support in NERS. That's awesome. Obviously, to get new investors and institutional investors involved in that. Um, I would say, again, I'm always open if you'd like to schedule a one-on-one call. Investors that know that have reached out, I try to do my best to jump on calls with investors regularly. So if there are specific questions you have, or want to jump on a one-on-one call, or even want to, if you feel confident in NERS, maybe speak with their team about VST, or more than happy to even connect you with other shareholders that have invested in VSTN and other projects, for additional kind of credibility verification. So yeah, again, thank you for your interest in investment in NERS. And if you have any questions, please feel free to reach out to me, and be more than happy to yeah to answer any questions. Um, why don't you sell VST to buy NERS and go all in? VST market cap is a joke. Again, that's a comment, and it's unfortunate you feel that way. Um, that there's a reason why we built VST, and for the diversified risk adjusted approach, and that's why we have VST, is that we also have other investments in there that we're very excited about as well. Uh, can I get a quick recap of what was said about Game On? My phone died as you were just starting to go into questions and answer. So, with Game On, uh, really quickly, it's very unfortunate what's happening right now. We are working to kind of support them through this period. So our goal is to get them trading again, help them get through this, through the debt challenges that they have, and continue to build on that business to whatever it may look like. Just as a side note too is I feel when we invested in Game On, and Game On went public in 2021, uh, our investors that kind of remember at that time, our interest was they just come out of a Comcast accelerator. Um, the business was around building an app within Comcast set-top boxes that would allow for like a social gaming TV experience. And Real Housewives was one of the pilots, and we loved it around this idea of sports. Where you're watching real-time sports with your friends, and you could bet, win prizes. This was what we saw as an opportunity for traditional cable companies and static TV to be able to compete with what was happening on the streaming side. They, obviously changed their business model and went down a path which we felt good about too as well. And I think really this year, what put them into Game On into a downward spiral was the token listing and the game token not performing well, which I think impacted their kind of their cash flow position. So uh, we don't think that there was anything nefarious or scammy about what they were trying to do. It's just sometimes like you make a call and you swing for it and it just doesn't work out. I do, however, you know um, feel that the CEO needs to do a better job communicating with shareholders and investors right now. And I don't know if it's a disclosure challenge or just a challenge where they're just, I've seen this with CEOs sometimes, they just handle adversity poorly. But my hope would be that Matt does come out and communicates if shareholders email him directly. And again, we are continuing to work with them through this to kind of get them back trading and help them with their current kind of situation. I think I got to everything. Everyone, thank you so much for the time. This has been recorded. I'm gonna try to get Abby to push this as quickly as possible. I'm gonna share a couple of links in the Discord channel for anyone to share that I kind of referenced that I think I'd like people to see. And then if there are investors like the gentleman who had come into NERS, uh, please feel free to reach out to me. I hope I answered your question. But please feel free to reach out to me if you have any questions about VST or need any further clarification. Thank you, everyone. Have a great Thursday.